last hour of trade on Wall Street. And what a dismal, grim sort of day it has been. The sea of red from the moment right the way through to almost the close. We are off the lows of the day. There's one number to show you that's been the reason and the cause. US interest rates going up. The 10-year bond, that is the number, that is the details, because when you factor that in and you look at the numbers, you see this is what's driving the day. Equities, they are sinking in the battle of stocks versus bonds. Within that, you've got tech, which is tanking. And the Salesforce chief executive tells us it's time for governments to regulate. If that weren't enough, Russia and China are now accused of sweeping cyber attacks, and that has also dragged down technology stocks. Live from the world's financial capital, New York City, on Thursday, the 4th of October, I'm Richard Quest. I mean business. It is the final hour of trading, and the numbers have been pretty grim, dismal throughout the course of the day. If you look at the Dow in the last hour, you'll see, although we are off the lows of the day, we're not huge. I think the lowest point was down about just over 315 or 317 points. This was down just around 2 o'clock, and it's similarly at 1:30. Now, we are in that part of the day where you watch very closely as market makers and investors decide how they want to go into the overnight. Do they want to remain long? Are they shorting out? And that's what you're going to see over the next hour. So we could expect to see volatility because the nature of the day has been extremely volatile, coming up slightly down 246. NASDAQ is the worst of the US markets at the moment. The tech and communications index fallen very sharply. This is the global scenario at the moment. And if you see the way the day has moved, obviously we start in Asia and we have some heavy losses in Hong Kong with the Hang Seng. You then have Europe, which has the FTSE off 1.5%, and also Paris down 1.5%. And then you end up in New York and you see the NASDAQ down the best part of 2%. And the reason, well, if you factor down this to its raw potential, it's the sell-off starts perversely. Ironically, all of this starts with positive economic news in the United States, specifically private payrolls, jobless claims, and new jobs in the service sector. That is the job expectations leading into tomorrow's morning's jobs report, that the jobs picture in the United States is pretty good at the moment. Now, that leads the Fed chairman, Jerome Powell, to make various comments suggesting that rates will continue to go up at the short end, and that leads to rate rises. As the official rates rise, so the market rates rise, and there's an expectation of increased rates across the board. So you get the US 10-year hitting the highest level. The bond yields, official rates rise, bond yields follow. We now have bond yields at the highest rate since 2011. And all in all, it raises borrowing costs. Because what happens is, as bond yields go up, stocks usually go down, and you end up in a tussle for yield. Take a look at that. That's what's going on. That is exactly what is happening at the moment in the markets. And that is what is leading to a Dow and a US market down some 1 or 2%. Jay Bryson is with me, a Wells Fargo interim chief economist. Good to see you, sir. Thank you very much indeed.
Thanks.
I mean, ignoring the fact that the rate rises is perversely because of good economic news, the markets are finding it now somewhat difficult to take in its stride.
Well, yeah, markets are always kind of forward-looking, especially the stock market here. And so, as you kind of just described, what's happening is you're getting this very positive economic news out of the United States, and that leads investors to think, oh, there's going to be more Fed tightening coming down the line. And so as the stock market starts to digest that and watch bond yields starts to back up, they're looking into the future and they're saying, okay, so if the Fed is really kind of tightening here, maybe that causes growth to slow as we kind of go forward. So, the point here is things right now are very, very strong, but the market is always kind of forward-looking and is trying to discount how much potential slowing we're going to have further out.
Is this rotation or is this downward draft on the market because of expectation of lower corporate profits in the future on the back of a slowing economy, or are we seeing it just a straightforward rotation for better yield, better return?
Well, Richard, I think it's probably like many things, it's probably a little bit of both, in the sense that, as bond yields go up, everything else equal, they become a little bit more attractive relative to stocks, which are a little bit more riskier. So you do have that going on, that rotation into something that's going to be higher yielding. On the other hand, though, if things do slow down enough because the Fed is getting, a little bit more aggressive in terms of tightening, that could also weigh on profitability. So again, it's a little bit of both, I think.
Have a listen to Jim O'Neill, Lord O'Neill, former head of Goldman Sachs Asset Management and chief economist. Have a listen to what he said about the dollar. I want to get your thoughts.
That I think is strategically wrong is that the role of the dollar is now still the same as it probably was 30 years ago, despite the fact the US economy is nowhere near as important for the world as it was. And so what happens because of the integration of the financial system, Fed start tightening, bond yields start rising, and here we go yet again with this sort of interplay with many so-called emerging markets around the world. And
do you accept that that is the scenario we are in, particularly emerging markets being hit on the back of what is an excellent economic position and a very strong dollar?
Well, yeah, I mean, so what we are seeing is obviously yields in the United States are going up. These bond markets are very highly correlated. So you're seeing yields in Europe going up as well. And even they're ticking up a little bit in Japan. And so you have what's a relatively safe asset, a 10-year treasury bond, the yields going up, the attractiveness that's going up. And then you have these higher yielding but higher riskier sort of places like the emerging world. So when you do see sell-offs in the bond market, when you see higher yields here in the United States, everything else equal, that does cause people to try to, to flee some of those riskier sort of assets. Markets will eventually calm down, but as long as the bond yields here are rising and rising sharply, you're probably going to continue to see emerging markets sell off as well.
And finally, these elevated levels of 26,000, the numbers look quite horrific. Dow off 200 or 300 points. It looks quite a large number. But we are at much higher levels. What do you think it takes to calm things down, to have a period of stability, if such that there could be?
Well, I think what it's going to take is just, continued signs that the U.S. economy is not overheating here, right? I think what it really takes is if you look going forward, we see inflation numbers continuing to come in at, moderate sort of levels, that, inflation's not really kicking up, that the Fed doesn't have to over-tighten. At that point, I mean, it's almost like a Goldilocks sort of thing. You have strong growth, but you have low inflation. That's a great scenario. And so I think, as we go forward, we really need to look see what's happening to the wage numbers and see what's happening to the CPI numbers as well.
Good to see you, sir. Thank you. Great to have you on the programme. Look forward to it in the future. Joining us from Wells Fargo's Securities. The newly agreed trade deal between the US, Canada and Mexico, the USMCA, has helped drive markets higher for much of the week. Now, despite the breakthrough, Washington remains frozen out of the upcoming meetings on international trade hosted by Canada. Ottawa is claiming only like-minded nations have been invited. The USMCA has also sparked controversy over how it's going to restrict Canada's ability to make trade deals with non-market economies. That's what it says in it. In other words, those like China. Joining me is the former Prime Minister. Prime Minister, good to see you. Kim Campbell is with me. Former Prime Minister of Canada, but also one of the parties who was there during NAFTA itself.
Indeed, my signature is on the environmental and labour side agreement, so... And in fact, the Canada-U.S. free trade agreement was the issue that brought me into national politics. And the 88 election in Canada was really a referendum on that deal. So trade's a really important part of my history.
And when you now look at this new agreement, with all its deficiencies, do you feel Canada was somehow bludgeoned into it?
Well, I think the timing of the negotiation was something that we hadn't necessarily expected, except when President Trump was elected. Since getting rid of NAFTA was one of his campaign promises, we expected something would happen. But I think other than that, I think that we've had time to do what we needed to do in the negotiations. I don't think we thought we were bludgeoned. I think we hoped that we'd have a happier and more enthusiastically supportive American administration.
From what you've seen in the agreement, Canada benefits?
I think so. I think so.
And if you look at this strange clause at the back end of the agreement about no party being allowed to do a deal with non-market economies, and if they do, then that can be terminated in bilaterals. What do you make of that? What's behind it? Well,
you know, first of all, I don't think that Canada is. I mean, we've talked about trade agreements with China, but I think even given this latest scandal with the chips and all that kind of stuff, I think creating binding trade agreements with non-market economies who do not have the kind of legal structure behind them that goes with market economies that we work with, I think is a bit worrisome. So I don't think in the short run that's a problem for Canada at all.
But what's behind it? Why bother putting it in?
Well, I think this is part of the American desire to put pressure on China and say, look, we aren't alone. You know, we've got, you know, because don't forget how big the North American trading market is. We've got this big, huge market, and we are going to put pressure on you to play by the rules.
How much bitterness is there in Canada over the way the Prime Minister was treated by Donald Trump? Now, they can paper it over and say it's all politics and so. But the reality is, first of all, to claim national security as a reason for tariffs, and then to call him dishonest and weak.
I think people consider the source. You know, because, you know, the president says terrible things about somebody. Now, he's in love with Kim Jong-un now, who was actually a terrible Mr. Rocket Man. So I think we don't take it all that seriously. I think the national security thing was offensive. But remember, national security is the get-out-of-jail-free card in most trade pacts. It's the one grounds on which you can put tariffs on your otherwise non-tariffable partner.
You were the first woman prime minister, first female prime minister of Canada, and the only one. So far.
I'm waiting.
And you take the lead on gender-related issues. What do you make of the way Dr. Fox has been treated on the Kavanaugh hearings? Now it looks like it's coming to a vote.
Oh, I think the issues are so much more complicated than even gender, although I think sexual assault and all of those issues are real hot buttons. I could criticize that process much more broadly in terms of the failure to provide documents and things.
But if you take...
It's a small piece of it, but sure, it's part of an ongoing history, an ongoing story.
Yeah, but you say that, but the reality is that these issues only become live when they rise up the agenda, and this one has, because of Dr. Blasey and the way in which she... And then President Trump's comments in his speech the other day, and now seemingly a rejection of it all with the acceptance of the FBI and a vote. Where does it leave women?
Well, I think it leaves some women much more motivated to press for better recognition of their rights, to press for a more honest assessment of what it means to be seen as a body who is the perk of power, is really what it boils down to, that many men seem to think that women's bodies are their perks when they get powerful positions, and how incredibly destructive that is. And we see this even with men. I mean, sexual assault is one of those things, whether it's men or women, and you see these men who were victims of Catholic priests, how for the rest of their lives they deal with shame. It's the sense of powerlessness, I think, when you feel that somebody is taking liberties with your body. So I think these scandals and issues raise the profile and perhaps motivate people to push for better recognition of it, change in social mores, maybe change in policy.
Good to have you with us. Thank you very much indeed.
My pleasure.
Thank you. As we continue tonight, Western allies pointing the finger at Russia, accusing the country of worldwide state-sponsored espionage, and the chief executive of Salesforce is calling Facebook the new cigarette. And we'll ask you, so please get your mobile device ready. CNN.com/join. What would cause you to get rid of Facebook? In a moment.